Fair value gaps. This is one of my another one of my favorites. I have some favorite topics that I love to talk about more than others just because of the excitement it brings. I don't know what it is about certain topics. It just gets you itching a little more, get your energy flowing a little bit better. And this is one of those topics where it makes a lot of sense. It's one of those topics that just resonates with a lot of people. And I'm going to waste no time. I'm going to waste absolutely no time. We're going to get straight into it. I know that a lot of the videos after intermediate are more than 10 minutes long. For a lot of people, their attention span is so short that more than 20 minutes on a video is like too much. And that's unfortunate. That's actually really sad and disappointing to see that people's attention spans don't last more than 5 to 10 seconds to a minute because we're so used to scrolling on social media that you're used to these short clips. But if you want to pursue something in life worthy of making you a success, you're going to have to put in a little more time than a couple minutes, guys. So welcome to Fair Value Gaps. Let's get straight into it. What is a fair value gap? A fair value gap is actually very similar to an imbalance, which is a lesson that we had on the intermediate series. An imbalance is created where there's a ton of selling volume or buying volume that creates an inefficiency within the market, right? So fair value gaps occur throughout the market frequently. They are characterized as discrepancies in pricing. Markets move in a fascinating nature. Although it seems chaotic, there are patterns all over the place. While buyers and sellers predict future price and execute trades, these patterns take effect and occur over and over and over again. A fair value gap is commonly misconstrued with imbalances. Imbalances are much larger and don't always get filled by future price action. That's the difference. Similar to an imbalance, but misconstrued with imbalances because an imbalance is larger and doesn't always get filled by future price action. Funny enough, fair value gaps form inside of imbalances. So let's dive in and take a look. I love this topic so much. So Euro USD on the 1 hour. You already know we cover Euro USD on almost every chart. Okay. We're on the 1 hour time frame. Each candle represents 1 hour of price. We're in a downtrend. Okay. Look at the candle to the left. You see my cursor? Still sharing my screen. Hold up. Hold up. Hold up. Hold up. Wait a minute. Yeah, I don't know what that is. All right. I'm sorry. I want to make sure you guys still see the screen. All right, we're good. We're good. Just follow my cursor. All right, follow my cursor. So you see the large candle on the left, okay? Notice how it's a massive 1 hour candle. The wick to the left of it goes all the way down the body of the candle. And then the wick to the right of it goes almost all the way up. So you're left with this nice area, okay, of imbalance that gets filled relatively quickly by two large full body 1 hour candles. Okay. Technically, this is just an imbalance. That is just not a fair value gap. That is just a massive imbalance. Okay. So on the right side here, I have an image where price is choppy, right? The candles are the bodies of the candles here are small. They're very insignificant. When price starts to pick up again and volume starts to enter the market, we have a large buy candle followed by a sell candle, followed by a buy candle, followed by an engulfing 1 hour sell candle. Notice where I put my lines. Notice where I put my lines, guys. Look, okay? Horizontal line going through the body of the bearish candle, starting at the wick of the previous candle, followed by a horizontal line going through the wick of the candle to the right. This is a pitch perfect 1 hour fair value gap. The area, the volume, the space in between the two horizontal lines is your fair value gap. A wick or body then trades back into it to rebalance the discrepancy that was created. Notice the closure of this 1 hour wick. Notice how the wick shoots up in an hour. And this, remember, this is over the course of 1 hour. The wick shoots up into the body of the two horizontal lines and proceeds to close below that level. If you can just trade fair value gaps, be my guest. I know so many traders that just trade fair value gaps and are extremely successful traders. Extremely successful traders. And it's pretty simple. I mean, it's a large candle followed by a gap in the middle. And then what? You just place a sell limit in the middle of the candle. You're telling me, oh, Mason, you're telling me it's that easy, bro? I mean, who knows? All right. We're going to go down in time frames. We're going to fractalize in time frames. So we're going to go from the 1 hour to the 30-minute to the 15 to the 5 to the 1. Okay. And we're looking at the same fair value gap, remember? So check it out. Now we're on the 30-minute. So this 1 hour candlestick that was created is now in two candlesticks. Notice that the same horizontal lines are in play here. Okay. We have the same candlestick that is created. This 30-minute body is a large imbalance. Look what price does in the 30-minute time frame. It trades back into it, fills it, and then just drops off. So the 30-minute looks a little different, right? Because now that 1 hour wick that fills the imbalance is now shown in two candles, where you have a big bullish 30-minute that closes in the middle, and then the next 30-minute candle opens and drops through. Okay. The 15-minute, same horizontal line. We have the fair value gap that's created on the 1 hour, and we're breaking it down on the 15-minute. Check it out. Big 15-minute candle trading into the imbalance, closes pretty high, and then the next two 15-minute candles drop straight back down through all the way to the downside. So notice the difference and notice the difference in price. Notice the fractals getting created, right? Notice the difference. Notice the difference. Okay. 5 minute. 5 minutes rowdy. We have a large slump off. Those 5-minute candles are producing, right? They're just straight selling, not a single buy candle within that entire range of price, right? Boom, same exact horizontal lines. Big 5-minute candle up, and then 5-minute candle, 5-minute candle down, 5-minute candle back up, 5-minute candle down, 5-minute candle down. That's all within that 1 hour candlestick, right? That we were looking at from 2 o'clock, ready? On the bottom, right? From 2 to 3, from 2 to 3, it was up and it was down and it was up and then it was down. So that's a look from the 1 hour all the way to the 5-minute. Now let's go to the 1 minute. Ooh, look at that 1 minute. So basically, kind of like, looking at price action from a really just simple standpoint, we're used to, as a trader on the 1 minute, we are used to this type of price action, Elliott wave pattern price action, right? But when you see this type of price action where it's untraditional, okay, untraditional price action is heavy selling. Heavy selling. The reason why it's considered a fair value gap is because there was so much selling pressure, the market did not rebalance correctly and move how the algorithm normally does. You can see how untraditional the price action looks compared to traditional price action. You have your untraditional here, and your algorithm based here. Does that make sense? Does this make a sense to you ladies and gentlemen? Yes? I mean, it should be clicking. It should be firing. You should be firing light bulb. Bah, 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 bah. Boom, we're getting out of there. We're going there. We're getting out of there. That was from the last video. We're going there. We're going here. We're going to pull up there. We're going to pull up. We're going to pull up here. We're going to pull up here. We're going to go here. We're going to get rid of this. We're going to go here. And we're going to go here. Beautiful. Okay. We're on your USD, right? Look at this. Look at this. Look at this. This is an imbalance. That is an imbalance, right? That is not a fair value gap. That is an imbalance in price, right? What is this? What is this? That's a fair value gap. This is a fair value gap. Boom. You take a trade setup. Boom. Stop loss just above the high. Boom. TP, whatever you want. Boom. Comes into the fair value gap twice. Comes into the fair value gap twice. And tanks to the downside. Man, does that not get you excited? Does that not get you excited to see that setup happen just like that on the 1 hour time frame? I mean, come on, guys. Come on. Come on. Let's keep going. Let's keep going. Boom. Algorithm-based price. Looking good. Boom. Massive 1 hour candle to the downside. Absolutely annihilating price. Absolutely taking care of all of the buyers. Every single person buying here just gets taken out in one candle. Price chops around for a little bit, right? And remember, this is 8 a.m. So that's going to be the biggest move, most likely, right? Then we have some chop. It has all the entire rest of the session was just straight chop. I mean, no more than 30 pip range that Euro USD traded in after 8 a.m. So you were either in the trade, you were either in that sell and you caught that massive move to the upside. You either caught 75 pips or you were just not in the market. You know what I mean? So then price what? Chops, trades what? Higher, and creates what? A small fair value gap on the what? The 30-minute. Where's my time frames at, bro? Actually, you know what? We don't even need time frames. We're good. Okay. So check it out. Check it out, right? Here we are on the 1 hour. Notice how the price is pretty good, right? There's not a lot of inconsistencies. Not a lot of inconsistencies. Price is trading very well. Okay. Price is trading very well. You have price come up, trickle a little bit, and then trade higher at 8 a.m. the next day. What gets created? What gets created? An imbalance. Where? Right here. I'm sorry. I'm gonna stick with the horizontal lines. I apologize. Boom. Horizontal line there and there. Okay. I'm gonna extend it outward. Okay. Check this fair value gap out right here. Notice how we drew it from the previous candlesticks, and notice how on the 1 hour price trades right back down for the retracement at 11 and then trickles a little higher. However, it would have been a tough trade here because this trade would have been tough because it didn't fill the middle. But what happened? Price came back through all the way over here and absolutely annihilated everybody. Like this entire move right here on the next day, like this is Thursday, right? Like Thursday, price trades higher, right? And then the next day, price trades lower and annihilates anybody in buys over here. Like literally anybody in buy positions all throughout this area with their stop losses, like anybody entered buys here, they get annihilated here. Anybody who was in buy positions here at this rectangle gets annihilated here. And then price pops back up. By the way, that's complete manipulation. That is like, you know what I mean? Like that is complete manipulation. And if you were still looking for price to fill the fair value gap, you would have had to have a 28 pip stop loss below this level here to catch that trade. That would have been a pretty big stop loss for a trader looking to catch a positive RR in one day on your USD. Do you know what I mean? So that was a volatile wick. Now, check this out, right? Check this out. If we go on the 1 hour and we're scanning for fair value gaps. We're scanning. Is this considered a fair value gap right here, where you have price on the 1 hour? Whoops. Right? Because it looks like a fair value gap, doesn't it? Doesn't that look like a fair value gap right there, guys? Right here. The reason why this is not a fair value gap is because the trend is now bullish. You have to think about where you are in the market. You have to think about where you are in the fractalization, right? In the pattern. Why would we want to sell? Why would we want to place a trade in a fair value gap that's in a bullish environment? Like that is a fair value gap, but you don't want to sell at that fair value gap. Do you know what I mean? Because if you sold at that fair value gap, you'd have your entry in the middle, and then you'd have your stop loss just above the high, right? Just above the candle high. Like you'd have your stop just above this high right here, and your TP would be whatever it may have been, and you would have gotten stopped out. You would have gotten stopped out right there on your USD. Okay. So you're looking for, you're going to want to fill, if you're bullish, if the trend's bullish, you're looking for a bullish fair value gap. Now check this one out. Price trades lower, right? Price drastically trades lower. And then at 9 o'clock and 10 o'clock, it trades all the way back up. Remember, we're bullish. After that massive bullish candle appears, that's a fair value gap. So we take our trend line. Previous wick was here. Previous wick here. I keep clicking along the wrong line. Previous click here. Boom. This is our bullish fair value gap that we're looking to take a trade from. We get our parameter, our boom, middle of the candle, just below this low here. So 20 pip SL and whatever TP you want. Price never activates in the middle. Price fills the fair value gap as much as it needs to, clearly. And if you place your parameters in the middle of the trade, you just don't happen to take a trade for the day, which is completely okay. Man, that's some sauce, guys. That's some sauce. That's some saucy 1 hour fair value gap stuff. Remember, this is an imbalance, not a fair value gap. That is an imbalance. That doesn't need to be filled. That technically doesn't need to be filled. Fair value gaps need to be filled on lower, like, lower volume kind of stuff where you have, stuff like this over here where like even this is a nice little fair value gap that gets created. Check this out, right? I mean, and this gets filled really nicely, like really, really nicely. This fair value gap gets filled very, very beautifully. Where you have short position, middle of the imbalance, just above the wick of the previous high, and you take it however many pips. And so that was a beautiful, beautiful fair value gap trade on the 1 hour. And then technically this is not a fair value gap. That's just, yeah, that's not a fair value gap. This is not a fair value gap. I mean, it is, but it gets filled relatively quickly. And the candle next to it doesn't really trade into it. You know what I mean? It's not like a pretty fair value gap. Also, technically speaking, like if you're looking at price and price has a wick here, right? Like notice how the body closes here, down here, and you're looking. Technically, this is like kind of a fair value gap, but not really, because it's just a continuation of trend. Like it's showing that price is very bearish. Doesn't really have to fill, like it fills on the next candle, which can happen. That can happen all the time. And if you're trading on the 5 minute, if you're trading 5 minute fair value gaps and you're a 5 minute trader, that might be something you're willing to trade. So So guys, that's gonna do it for that's gonna go ahead and do it for this video. I hope you guys enjoyed. I hope you guys took notes. And if you find any trade setups, send them in the group chat. I'm looking forward to your setups, and I'm looking forward to see your progress and your withdrawals here at 1022 Mentorship. I will see you all in the next one. Take care.